Hello and welcome everybody to the course Ascending SMC. So today in this video I will be talking about the concept or topic which is known as fair value gap. Okay, fair value gap. In short, we call this as a FVG. So what exactly the FVG is? So whenever you see if price makes a candle like this and this candle wick just close here and this candle wick just closed here. So the gap between this wick, the gap between this wick and this wick will be your fair value gap. Alright. So this is how you determine the fair value gap. So even if you have another candle here, right up here, and we have some sort of wick is closed here. So here will be your another fair value gap. This is your fair value gap, first fair value gap, and the second fair value gap. So that is how you determine the fair value gaps. So the fair value gap is basically where the market orders are. So what they do, they look for price to fill some sort of fair value gap, and the limit orders just above the FVG. So they'll wait for market to come and fill the fair value gaps. And after filling the fair value gap, it will look for sales from the order block or supply demand zone. All right. So let's just find the fair value gaps on charts. So in this is the Euro USD chart. So we have fair value gap here. What happened here? This was the fair value gap here. This was the fair value gap here. And what happened here is prices came and filled the fair value gap, half of the fair value gap, and dropped again. Okay. So we had another fair value gap here from this wick to this wick. So market just almost filled the fair value gap and dropped. So this is also known as fair value gap, and this will also be a fair value gap. And there are lots and lots of fair value gap. You see, this is also a fair value gap here. This gap, this will the wicks closed here and this wick closed here. So gap between these all these wicks will be a fair value gap. So in this zone, we have a fair value gap just from this one to this one. So this will also be your fair value gap. And we have another fair value gap here from here to here. So that is also a fair value gap. And there is also a fair value gap here. This is also known as fair value gaps. So that is how you determine the fair value gap. Okay. So you will find these things on all time frames. Like we had some big fair value gap here. So market just came again and filled the whole fair value gap and dropped from this bearish order block. Okay, so that is how you select the fair value gap. And in this one, let's find more examples of it. So what we have, market closed, the wick closed here, and this wick is closed here. So we have fair value gap in here. Okay, and you see same thing here again. We had some sort of fair value gap from this week to this week. So what happened here? Market just filled this fair value gap and gone upside from this bullish order block. Alright, market just gone up from this bullish order block. So that is how you see the fair value gap. And let's just go on. Even you will find these on smaller time frame as well. So we have a fair value gap in here, from here to here. So we have, and after this week, we have this week filled the half of the portion. So we will consider this as a fair value gap, and we will wait for market to come and fill this fair value gap for another upward move. So that is how you see the fair value gap. Same thing you see, we had a fair value gap right here to here. So what happened here exactly? You will see price just filled with fair value gap and gone downside. So that is how you determine the fair value gap. Okay, and this will also be a good fair value gap from this week close to this week. So price also filled this fair value gap, missed some of the gap, and this row filled the whole fair value gap. Okay, so and after that, this has made another fair value gap here to here. So what happened here? You can see price has filled this fair value gap and gone upside. So that is how we consider taking fair value gap as a point of interest and mitigate the order block just above or below that zone. So this was the bullish order block. Price filled the fair value gap here and gone upside. So we have another fair value gap here, and price might fill this fair value gap again and can go upside. But you see, we have another fair value gap here from this candle with this candle as well. So it can happen like this. Price can come and fill this fair value gap again and can go upside. So that is how you can consider this fair value gap as taking in your point of interest. And we have another fair value gap here. You can see this was the fair value gap here from this week close to this week close, and price just filled this fair value gap, mitigated this candle and gone upside. But we have another fair value gap here from this here to here. So that is how they fill the fair value gaps and go upside or downside. Because fair value gap is the important thing the big boys see. It might have to fill the gaps like many limit order cats miss. So those are the gaps, those are the fair value gap where they fail to get some kind of entries. So that is why there is the fair value gap there. So it has to fill for taking any bullish or bearish move. So you see that's filled the gap and gone upside, filled the gap and gone upside. So we have some fair value gap left in here. We have some fair value gap left in here also. So you might see in all the time frames. So we have another fair value gap in here to here. Same thing, fair value gap in here to here. Lots of fair value gap. You see here to here. So that is how you determine the fair value gaps. And let's just go on another pair to find the fair value gaps. Okay, so this will be a GPSD chart. So what happened here? We had a fair value gap in here market just came inside, filled the fair value gap and mitigated this bullish order block and gone upside. Okay, but we have another fair value gap here. So it might come again and fill this fair value gap and mitigate some sort of liquidity or sorry order block and can give overnight retracement towards the upside. Okay, so same thing here. What happened here is price just filled this fair value gap. This will close and mitigated this order block here and given a nice retracement towards the downside. So this is how we determine the fair value gaps. It might find on higher time frame to lower time frame as well. So you see, we had a nice fair value gap from here to here. So what happened exactly? Price just came in this candle, didn't fill this fair value gap completely. So we had some another fair value gap left in here. So just filled, mitigated this bullish order block and gone upside. Okay, and made another fair value gap from here to here, and again filled the fair value gap and gone upside. All right, so see, we have another fair value gap here from this low to this high. So that is how we consider the fair value gaps. Okay, so fair value gap is also a very important topic for you to understand. And we have another fair value gap in here. That is this. So this might can get filled as well for taking out any bearish move after filling this fair value gap. It might mitigate some sort of order blocks, bearish order block, and can give a nice sell move again towards the downside. And you can see we have some sort of fair value gap left in here as well. It might fill this fair value gap as well. Can fill this fair value gap and can keep an retracement towards the downside as well. So that is the methodology of fair value gap for you to understand. And this is a very important concept as well. So that's it. That is how you understand the fair value gap. Okay, so thanks for watching. See you in next session or in next video.